Welcome back to Fast Money. We've got a Bitcoin alert for you. Listen to what Fed Chair Jay Powell said about the cryptocurrency today.
Crypto assets, they're highly volatile, see Bitcoin, and therefore not really useful as a store of value, and they're not backed by anything. They're more of an asset for speculation. So they're also not particularly in use as a means of payment. It's more a speculative asset that's essentially a substitute for gold rather than for the dollar.
Brian Kelly, what do you think?
Yeah, I think 2017 called and wants its criticism back. That's what I think. I mean, these are old criticisms of Bitcoin that have been proven. It's just, it's ridiculous. But here's the good thing is the Fed does not see Bitcoin as a threat to the dollar. The Fed does not see Bitcoin as a threat to the dollar. If you were worried that the Fed might see that and might do something, that's all you need to hear. It's all systems go for the Bitcoin.
Self-destruct sequence activated. 3, 2, 1.
Is this your homework, Larry?
Ask him about the car, man.
Is this yours, Larry? Is this your homework, Larry?
Is that your car out front?
Is this your homework, Larry?
We know it's his fucking homework. Where's the fucking money, you little brat?
Welcome back to the channel, everyone. Johnny here. I hope you all had a wonderful weekend. Let's get right into today's episode. All right, so Bitcoin started to move to the upside on Friday before hitting some pretty hefty resistance here at the $56,600 level. Now, Bitcoin is sitting near the $55,500 level right now, but is still above the 54,095 CME close from this past Friday, leaving a gap about 2% down below the price. Now, with Sunday's session underway, we should get some insight into whether or not Bitcoin is going to head down and fill that open CME gap, or if the futures will meet the spot price above 55K and take another shot at breaking the very hefty overhead resistance here at $56,000. All right, so structure here does have some bullishness to it. Price action broke bullish out of this descending broadening wedge, a very bullish reversal pattern that gives us a measured move target up near $63.4 thousand, and if met, would be a new all-time high for Bitcoin. Now, the break across the top trend line of this falling broadening wedge really wasn't very convincing, as there was not much volume. As you can see here, we didn't even make it up to the 21 moving average for volume on the 4-hour chart, but the bullish retest has in fact been confirmed when price action came back down to the top trend line early this morning, right around $54.4 thousand. It was quickly bought back up, confirming this resistance support flip. So what may be happening here is that if Bitcoin does indeed come down to fill this CME gap, it would also put in the right shoulder of this very bullish inverse head and shoulders reversal pattern, putting the neckline right about $56,000, coincidentally the same price level where this extremely heavy overhead resistance is. Now, if Bitcoin is able to go ahead and break out of this inverse head and shoulders and this descending broadening wedge across this heavy $56,000 resistance, we are expecting a move into new all-time highs above $63,400. However, if Bitcoin does break across here and is not able to put in a new all-time high or break across the 50% fib extension level, that could be a clue that Bitcoin is going to resume its bearish trajectory down to some lower price levels before the bulls step back in and take the price to new all-time highs. So here is the chart that we went over a couple of videos ago. Bitcoin did break bearish out of this symmetrical triangle, and it came down, met our pullback target 1 here at $51.9 thousand, and has since made its way back up into this bearish retest area. Now, if Bitcoin is not able to break across this heavy resistance here at $56,000, then we are likely looking at a bearish retest, a confirmation of a move lower, likely down to our pullback target number 2 at $49,200. And if price action is not able to find support there, then we're likely looking at a move all the way down to our pullback target number 3, just under $45,000. Now, the chances Bitcoin does break across this $56,000 resistance are looking pretty strong. And it looks as if right now Bitcoin may be forming that inverse head and shoulders that we talked about a little earlier. Let's take a look at some indicators. All right, let's start here on the 4-hour time frame. Here we have the volume-weighted MACD and the regular MACD. Now, it does appear that we do have some bearish divergence forming here on the regular MACD histogram. However, it is not yet confirmed on the volume-weighted MACD histogram. Taking a look here at the daily stochastic RSI, we did just get a bullish cross right before the CME settlement last week. If we take a look at the 4-hour stochastic, you can see that we are entering into bearish control territory here, as we just got a bearish cross just yesterday here on this indicator. If we take a look here at the 4-hour RSI, we just go ahead and zoom in here a bit. It looks like there is some potential bearish divergence forming here as well. Now, this is not yet confirmed, and it could still be invalidated if the bulls do step in and take the price a bit higher. Let's go ahead and take a look at some other market data and see if we can find some more clues as to where the price may be headed this week. The total crypto market cap here is showing some very similar price action to Bitcoin and is currently testing the overhead resistance or upper trend line of this bearish channel or falling wedge. It really depends on where you draw your bottom trend line, but if the total crypto market cap is able to get a bullish breakout here, it will be a great sign for the entire crypto market. And it is important to note here that we are above the 204-hour EMA as well as the 21, 8, and 13, getting a golden cross just yesterday. So heading into the weekend, 10-year Treasury yields rose a little bit, sitting right here, right around 1.66%. And the DXY was looking bullish as well heading into the weekend, signaling the possibility that the 10-year rate could drop a bit further heading into next week, which is indeed a bullish sign for the dollar, but a very bearish sign for Bitcoin and traditional markets. Let's go ahead and take a look at the DXY right now. So the DXY has been pushing further and further to the upside. It has broken across the 92% range on the index and is quickly approaching the 93.5% measured move target that we had from the breakout of this inverse head and shoulders. Now, while a strong dollar is typically a bad sign for stocks, the S&P 500 did finish last week in the positive, actually testing some new all-time highs. But I mean, it's inevitable, and it should go without saying that a correction is long overdue, and this market is definitely overheated, and you can clearly see this in these multiple bearish divergences forming on the daily RSI that have yet to play out. So we've discussed the correlation between the performance of the 10-year rate, the DXY, traditional markets, and Bitcoin in some detail. And while Bitcoin may see some short-term bearish price action, it would be extremely healthy to see a strong market correction, a move that would bring 10-year rates back down to more acceptable levels and bring some strength back to the dollar. In fact, the dollar could reach as high as 97% on the index and still retain its bearish outlook. If we zoom out to the weekly chart here for the DXY, a strong move out of the dollar could just be a bearish retest and confirmation that the DXY is headed to lower levels, with the measured move of a bearish breakout of this diamond top pattern all the way down here at 80% on the index and the 1618 trend-based fib extension, a 17% move to the downside. And it goes without saying that this would be incredibly bullish for Bitcoin. The inverse correlation between the DXY and Bitcoin that we've discussed over the last year suggests that a 17% negative move out of the DXY will likely result in a 250% plus move out of Bitcoin. A move that makes total sense, especially when we look at this macro chart that has been incredibly accurate since Bitcoin hit an all-time high of just $32 back in 2011. Bitcoin still has another 600% left to go before it reaches the all-time high predicted by this chart of $367,000 later in 2021. Now, while March has historically been a pretty bearish month for Bitcoin, over the last 11 years, it has seen the most price bottoms out of any month out of the year. Now, we took a deep dive into this historical price action in a previous video. It should be popping up in the top of the screen right now. Now, April is typically a bullish month for Bitcoin, seeing gains about 8 out of the last 10 years. And there are some strong signs that we could see an $80,000 Bitcoin sometime in April this year, especially when you consider the record open interest that we've been seeing out of Bitcoin across multiple exchanges. The most common open position for Deribit options traders with an April 30th expiry is in fact $80,000, a sign that these traders do indeed expect the price of Bitcoin to be at or above this price by the end of the month. Now, if history rhymes, we may have seen a sub $50,000 Bitcoin for the last time ever, and we could be gearing up for another record-breaking month, especially when you consider the state of global financial markets, a weakening dollar, rising 10-year yields, and bullish institutional interest. Now, with rumors of a US Bitcoin ETF once again floating around, as there have been a number of proposals submitted to the SEC so far in 2021, and depending on your viewpoint of whether or not a Bitcoin ETF will in fact be a good thing for the price, an ETF is in fact an important milestone in the journey towards mass adoption. Bitcoin's up nearly 100% so far in 2021, and if this macro chart continues to be correct, we are looking at another 600% moonshot to reach that 350K plus Bitcoin near the second half of 2021. Buckle up, fam. April is going to be one hell of a month for Bitcoin. All right, guys, thanks so much for sticking with me till the end. That's all I have for you today. If you're interested in learning about technical analysis and how to trade these markets, visit our website, 3candlecollective.com, and request your membership info today. I'll see you guys in the next video. Peace.